Hello and welcome to the Bloomberg Australia Podcast. I'm Rebecca Jones. This week, Iran.
Oil surges the most in 4 years before paring gains as the Iran conflict rattles markets.
We were having negotiations with these lunatics, and it was my opinion that they were going to attack first.
In response to that, Iran has been firing missiles and drones across all countries in the Gulf region. And when I say all countries, I mean all countries, even Oman.
In this episode, we're diving into one of the most consequential geopolitical events of the year, the ongoing conflict involving Iran and its ripple effects across global markets. We've seen oil prices surge and investors gauging the impact across asset classes from equities to bonds to commodities and currencies. To help us unpack what all of this means for markets, particularly from an Australian perspective, we're joined today by Rich Henderson, Bloomberg cross-asset reporter, based here with me in our Melbourne bureau. Rich, great to have you back.
Great to be here.
Let's start with what you're seeing in real time and how investors should be thinking about these swiftly evolving risks.
Yeah, so these are swiftly evolving risks. The key, I suppose, from markets and from investors' point of view is that the market pricing right now is telling me that investors are looking through any near-term disruptions. So the view currently, and it may change, but the view currently is that any problems we're seeing in the Middle East are going to be short-term in nature. And even an increase in oil, which we've seen, quite a strong one, nothing too crazy right now, but quite strong, that is even going to be able to be digested by the global economy, say, those higher oil prices. Now, we can point to US stocks. They're down in the Monday and the Tuesday session. Across those two sessions, the first sessions after the events of the weekends, they're down less than 1%. The S&P 500, the preeminent, really, benchmark of the US stock market, less than 1%. So that's telling me quite powerfully that investors are looking through this. Now, there's one big caveat here, and it's oil. Because oil is not just an expense for companies and countries who consume oil to do what they do, but it actually can lead to inflation. And this is the big one that markets are grappling with. Less so the impact on the stock market right now, it's really oil. Higher oil, leading to higher inflation, leading to higher interest rates. And so that's a huge question investors are grappling with.
And just on those oil prices, I checked in on Monday morning with our weekend reporter who'd just come off shift and said, how did it go? And he said as soon as he'd finished work, he headed immediately to the petrol station and filled up his car. Is that pretty common to see these impacts of events happening on the other side of the world impacting us in basically real time?
It is, yeah. I don't want to give people advice out there, but yeah, typically it's a swift sort of flow through that impacts because the refineries, the distributors, the retailers, they all have to respond. These are global commodities, so they have to respond quickly. And the price may go up significantly from here. We just don't know. At the moment, it's it's a little bit higher. It's in line with not a full-blown shock or crisis. It's very far from that, in fact, but it is higher, and it has the potential to go far higher if there's greater uncertainty in the coming days and weeks.
So you probably had the right idea there, sounds like. Rich, Michelle Bullock, let's talk about the RBA because she's been talking this week as well. She's come out and said that the Reserve Bank is closely monitoring this situation. What does this exactly mean for RBA policy?
Well, she also said that every meeting is live. And so the backstory with the RBA is that the Federal Reserve in the United States, that's the US central bank, they're still in an easing cycle. So they're still on this journey where investors expect them to lower interest rates. And what happened in Australia is that last year we had a little bit of a surprise uptick in inflation, and the RBA hiked rates in February. And that means that we're on a slightly different trajectory than the US and some of those peer central banks around the world. right? So coming into this crisis, we're already grappling with inflation. Now, as I said before, the issue is that if we get higher oil leading to higher inflation, then the RBA really has to keep a close eye on this. It can't let inflation get out of control. And so that's why Bullock is really stressing the point that every meeting is live. We need to be reactive to any signs inflation is going to creep higher and get out of control. And so I'm not making any promises. Every meeting is live.
The board will be actively looking at whether or not it needs to move more quickly. So I would discourage people from thinking that we necessarily only move every quarter.
And that was, of course, Reserve Bank Governor Michelle Bullock, certainly sounding very alert to the situation. Rich, I want to talk now about the stock market. We've just come off a busy couple of weeks here in Australia with half-yearly reporting season, all of the major companies releasing their statements. What is it looking like for the beneficiaries, I suppose, for want of a better word, of these global conflict situations? Who looks like their share prices is improved and who's likely to not do so well in times like this?
The two big areas that have emerged so far really are energy producers. You know, companies like Santos, Woodside, these benefit from an oil price going up because that often means more profit. The losers so far, you know, one of the big losers globally and in Australia are the airlines. And this is partly because the Middle East is a major hub and we're seeing all these headlines and distressing images of people waiting, Australians waiting, being caught in transit in Dubai, for instance. And so Qantas, Flight Centre, these stocks have been hit. So there's some of the, you know, the winners and losers of this, geopolitical episode.
And are the classic defence trades working here? And just to explain, defence trades, I don't mean involved in the conflict. I mean asset classes and financial instruments that people tend to gravitate towards in times like this. How are they going?
It's funny that you said defence because defence contractors, Drone Shield is a big one in Australia. It had a great day on Monday. And that's a stock that was just on a tear last year. And then it kind of came off the boil a little bit. But, you know, in a world of greater geopolitical uncertainty and the scope for greater hot conflict, Drone Shield does very well. And so military contracting firms do very well. But on the defensive trades...
Right, like haven currencies, etc.
Exactly.
The yen.
Yeah, so this is very interesting what's playing out. So typically what you would expect is the dollar, the US dollar would do well. Treasuries, which are US government bonds, they would do well, very safe. The yen would do well and the Swiss franc would do well. These are some of the most common, popular haven trades, defensive trades when things are uncertain. And what's interesting is out of those four, only one has really done quite well, and that's the US dollar. And there's a little bit of a reason there, you know, two main reasons. One is that the higher oil leading to higher inflation narrative means that interest rates in the US, for instance, may go up. And that's bad for US government bonds. And so that typical defensive move into treasuries, which are US government bonds, that hasn't played out. And in fact, treasuries had a really bad day on Monday in the US. Which wasn't really that expected. So investors are still grappling with the oil and inflation dynamic through this conflict. But the US dollar did very well. And so the reason here is partly because it's a great defensive trade, but also coming into this conflict, one of the most common or consensus views was a weakening US dollar. And so we're coming into this conflict after a period where the US dollar has gone through a weakening kind of cycle. And so it was actually, you know, kind of due for a little bit of a bounce. So it's a bit of a double whammy, double support, you know, from the conflict and from the fact that it had weakened this year anyway.
what else is at play in the background? What are we not paying attention to that we should be as the days and weeks roll on?
Yeah, I've been thinking about this a lot, and it's AI. So there's two main strands to AI that come up when I'm talking with investors. And I've been thinking about this all the time. One is the hyperscalers. These are the big US tech firms, Alphabet, which owns Google, Meta Platforms, which owns Facebook, are two of them. They've been spending quite literally hundreds of billions on AI infrastructure. So they're basically positioning themselves to be the major players in the AI future. Okay. Now, some investors are getting worried that this spending, it's like an arms race. And so the actual return on the investment that they're making might not actually be worth it. And so there's a fear that's growing among some investors. Again, it's not a consensus view right now, but there's a concern that these big companies will suddenly realize they've spent too much and there'll be a massive pullback and that'll ripple across global markets. For instance, semiconductor companies who have done amazingly based off of this demand, they will retreat. The other element to AI is its impact on software companies in particular. So a narrative that's been building for the past month or so is that AI companies, and we saw this really kicked off with an update from Anthropic, which has the Claude chatbot. They came out with an update, and they've done this a few times in the past few weeks, and it looks like it's going to completely disrupt an industry. And so software as a service companies, known as SaaS companies, have basically done very poorly. It's been called the SaaSpocalypse. Very scary. And so there's been a massive sell-off in these companies. So I think the market is still really uncertain about the impact of AI and along those 2 points that I've made. And I think that some investors will see this as an opportunity to actually say, well, AI is not going to be that disruptive for this company. So maybe I can, park some money in there and look for a bounce. So I think, there's a lot of cross currents with AI that are being trying to be understood by investors. And there's a huge amount of uncertainty. People really don't know what the impact of AI will be.
And I guess to bring it back to the conflict that we're seeing in Iran and also thinking about defensive trades, how have these massive companies like Alphabet and Meta held up this week?
They've held up really well. And the reason is that this AI trade is still on. And as I was saying, that spending on the AI infrastructure, investors still see great value in this because of the anticipation of AI being such a big part of the global economy. Individuals, companies, countries will be using AI in the future. And so because of that, these big US tech firms are not selling off. There's great enthusiasm there. And in a sense, those companies are sort of defensive. They've become a quasi-defensive play because they're in a sense, the first firms or a group of companies that are in line to benefit from the AI future. And also they're very profitable companies. They have, broad business lines. So they're not just AI.
Rich, we're talking together on Wednesday morning, and of course, we're talking in the middle of a live news cycle with the conflict in Iran, so things can and will change. But I think it's safe to say that both you and I will be watching closely.
Indeed.
Thank you for your time. If you found today's conversation insightful, be sure to follow the Bloomberg Australia podcast wherever you listen and check for more reading on politics, power and the business of money, including the latest reporting from Richard Henderson at Bloomberg.com. This episode was recorded on the traditional lands of the Wurundjeri people. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. I'm Rebecca Jones. Thanks for listening.